Holy mackerel. CJ Stevens, I think I lied.
Disclaimer.
CJ Stevens and Jerry Kallitsis work for Investia Financial Services Inc. All opinions expressed by CJ and Jerry are solely their own and do not reflect the opinions of Investia Financial Services Inc. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Investia Financial Services Inc. may maintain positions in the investments discussed on this podcast.
We're live. We're going.
All right. So topics?
We got, so my shirt of the day here now is positive vibes only. So it's been a tough year. So we're trying to keep it positive.
Okay, leading into that,
you're not very positive today.
Can I give you your positive vibes only?
Yeah, sure. Go ahead.
Sadly, my dad passed away this past week, so it's been a little stressful. But one of his favorite phrases when he sees things not going accordingly, which appears to be so now, is complete no system. So on behalf of him, I'd like to have the quote today as complete no system. Thanks, Dad.
We don't have any brandy, but Zoe Semas to...
Well done. Zoe Semas is the Greek phrase to life to us.
There we go. I'm learning a little bit. I know a few other Greek words I won't share.
Those are good words.
That's a good one.
Those are good words.
Yep, awesome. All right, well, let's get into it.
All right.
So we got a bit of a Halloween theme, updated the background. I don't know if you noticed the other change the editor made with the video feeds in there too. A little bit. I'm not sure your head could get any bigger, Jerry, but I think, it is a little bit larger on the screen.
Screen's bigger,
there.
So that's that looks good. And I do see the pumpkins underneath.
There we go. So the kids got me in the Halloween spirit.
I see they're all smiling. That's a mistake, but that's okay. That's good.
The spooky, as Charlotte says, the spooky ones. There you go.
There you go.
So our first topic today was the Philly special. So some people may have heard this. Not great news for the markets, or.
Well, I'm not so sure I'm linking the Philly to the markets, but yes.
So the interesting stat that came through was over the past 100 years, the surest sign of an oncoming financial crisis has been a Philadelphia-based baseball team winning the World Series. So the Phillies clinched a spot in the World Series just a couple of days ago. In 1929, they won the World Series. Great Depression. 1980, there was a recession. They won the World Series. Great financial crisis in 2008. Phillies won the World Series. And now here they are, luckily underdogs to the Houston Astros. So
I'm wondering if these guys get motivated from the COVID, the Russia-Ukraine war, whatever they're putting on their bulletin board to play better.
The organization thrives under bad economic times.
It's unbelievable, actually.
It's a Philly thing. That might be a Philly thing, actually.
It could be a Philly thing, whatever.
But I think we kind of wanted to turn this around and say, as an interesting tidbit as that is, we wanted to take this opportunity to look into some of the how the market performs, forward-looking returns, and of course past performance doesn't predict future performance, but just looking at a few numbers that just in case the Phillies do win the World Series and our financial crisis continues.
Don't jump off cliffs. Yes.
Yes, so to take a look at that there. So an interesting tweet was, since World War II, the S&P 500 finished the year down more than 20% only 3 times, 72, 2002, 2008. This year could be the 4th year. And the following year, after those down more than 20% years, stocks had double-digit gains there. So again, past performance doesn't predict future performance, but a good look at how things perform following these declines. And also this chart here, just showing 9 or 10 times that the S&P 500 has been down 25% or worse since 1950. And looking out 1 year, 3 years, 5 years, 10 years at the cumulative returns from the lows there. So obviously it's interesting to look at this chart and think in the past 70 years plus, we've had 9 times down 25% more, and 2 of them have been in the last 3 years, obviously with the COVID crash, and down this year again too. So it's not all bad news. We might have a light at the end of the tunnel here.
Well, some of those numbers are pretty substantial too. So again, we don't know, but just from a visual of seeing red and green, and of course, the red going to green also includes some dramatic rate cuts, stimulus of the economy, and all that stuff. And we
every
know
year
from
is
the
a
past,
different story. Yeah.
when that happens, you want to be sitting in the right spot and reap some rewards for all the suffering we've done along the way. So.
And I think it speaks to the fact that if you have a long-term outlook and a plan, then you can stay in the green more so with that long-term outlook.
What does it say there? Positive vibes only.
Positive
Yes,
vibes.
got it,
We're
got
being
it.
very
Okay.
positive.
That is a positive chart.
During that red.
I will give you that. That is a positive chart.
The red year. And something else we've been talking about throughout this year is midterm election years. So a lot of research has come out, this being a midterm election year in the States. So midterm elections coming up in the next couple of weeks, I believe, November 8th or something like that. So now a lot of research has come out that these midterm election years are historically volatile and down heading into November, mostly due to the uncertainty. Now, we've had a couple of other things come through this year, but looking out during a 4-year presidential cycle, also good news, positive vibes only. November to April are the best, during midterm years, are the best 6 months during a 4-year presidential cycle, which would be November to April upcoming. So another positive spin and a positive outlook on...
Not that I'm trying to
dampen the positive
dampen
vibes?
the positive vibes only, but any of those blue bars have Donald Trump involved in any of the
Well,
the chaos?
2018 had 2018 had Donald Trump in there, and I think what happens during these midterm years, once the elections happen, there's a bit more certainty in whose
Direction. There's
direction
more
of things
direction.
are going. Sometimes there's gridlock, and the market doesn't
Yeah.
mind if there's
Yeah.
gridlock, because then nothing.
We need direction.
Yes, exactly. So that was our quick chat about that, and moving into Philly Special. So moving into the 60/40 portfolio. So let's see if we reset the timer here. Got to get the editor on this stuff. So the 60/40 portfolio. So 60/40 portfolio, 60% stocks, 40% bonds. Historically, it's been
Which is
balanced.
a staple. It's been a staple number since I started 25 years ago. It kind of rides the ups and downs, and you always felt that was the right direction to be in. So
yes, and historically they're not as correlated. So in years where stocks are down, bonds are usually
they soften the blow.
and they soften the blow. So that diversification adds to it. So, but this year
How'd
has
they do
been
this year?
has been an exception. Let me go like that. So another chart here. This is a pretty busy one, but basically what you're looking at here is the rates of return of a 60/40 portfolio. The green bars are the equity returns, and the gray bars are the fixed income returns. So you can see historically since 1980, the green bars, the equity returns, usually make up most of the calendar year returns. And what you're also looking at here is the diamond in red is the 60/40 intra-year decline. So as you can see here...
So what it was at the worst moment of the year is what you're saying?
Yes, exactly. So throughout the year, the worst point during a year. And looking back to the 80s, if you look at the left side of the chart here, even in 81 there, bonds down, stocks up a little bit there. If you go to 90... bonds up, stocks down a little bit there. If you go to 2000, bonds down, stocks up. So when you look at this, you don't usually see them both down in the same time frame there. And I think until this year, if we go all the way to the right side of the chart, you see the green and the gray bar down. So it's been, to quote Jerry Kallitsis from previous podcast, this time's a little bit different.
Well, first of all, if you look at that chart and you just look at the colors alone, you don't see that happening since 1980 anywhere. So obviously there's something very unique about what's happening right now.
And I think, normally in previous downturns, you would have rates being cut. Rates being cut during slowdowns, pullbacks, recessions. Rates are coming down, which is good for bonds, and stocks would normally do bad in those environments, and bonds would normally get a little bit of a bounce. So I think this year, with rates increasing and seeing that slowdown, recession, that stuff, we're seeing both of them down. So a bit unprecedented to see them both down. Now, again, positive vibes only. We're down 10%. So you see there's a yellow line there. That's the down 10% line. So to give a few examples, when you see an intra-year decline that's below that yellow line, so down greater than 10%, the following year are the returns with the yellow stars on there. So now, up 13% in 89, up 25% after a double-digit decline intra-year in the previous year. So going through, other than in 2002, we have a few examples here of positive returns, double-digit positive returns for a 60-40 portfolio following
double-digit negative year.
Double-digit negative intra-year declines. So again, keeping it positive today on the
which
podcast.
Are pointing towards some good news going to eventually hit us, is what you're saying.
Yes, keeping the positive spin on things and the positive outlook on everything. So I think that's an interesting look at things, and again, an unprecedented return for the 60-40 portfolio. We can see, bonds haven't done that well because we've been in such a low rate environment. We haven't gotten much return from bonds over the last 5 and 10 years even. The bond returns, you can see those gray bars, have barely returned anything, but we've had good stock returns. So now this year, kind of a double whammy there, but not necessarily is the 60-40 portfolio dead. We still think, especially with rates where they are right now, if they do come down over the next 1, 2, 3, 5 years, that would be positive for bonds.
And the higher they go, the further they can come down.
That is true.
So
you
bonds
think
may be rewarded.
You think J Powell's got a little?
I don't want to talk about J Powell. Don't sucker me into J Powell.
You think he's raising them aggressively, so he's got some room to pull them back.
So he has more room to pull them down.
He's got more room to pull them back. Okay, all right, sounds good. Well, speaking of that, we're kind of moving into rates and inflation. I mean, we try to switch up the topics here just because we do have a little bit of time. So we try to switch up the topics, but this one's obviously been a major one this year.
It's been a major one for the whole year.
Every month more data comes out on that, and so we've had to keep including it in the podcast. So I think this time what we wanted to chat about was what builds.
But people are getting smarter. They they hear the numbers, they have their own opinion, they can roll their eyes, they give us the word core, they give us CPI, and then we patiently wait for, we went down 0.1%, but core, you exclude food, you exclude energy, so.
And it's one of those things, if you got, the market could react really positively if inflation did come down, but when are we going to see that? And I think you said core CPI, which is what we wanted to talk about today a little bit. And core CPI includes wages and shelter. So wages are one thing.
So make sure we're excluding energy and we're excluding food.
Yes, so core CPI excludes food and energy. That's right. And so the wages are what they call, you might see it in news headlines there, sticky, because if you get a raise, it's unlikely the next year your boss comes to you and says, well, now you're going to take a pay cut. So they tend to, once they go up, they tend to hold that level for longer.
Which is why I've been a little fearful of dramatic wage increases, exactly what you just said.
Yes, yeah.
It's not easy to reverse that.
Yes, and if J Powell's waiting to slow down on the rate increases for inflation to come down, it might be a little while if wages are, because of those wages being so sticky in the core, and more importantly as well, the let me pull this chart up here. The shelter costs, they make up over 30% of the core CPI, and it's a slow, long process for reduction. rents are still rising and home prices are still highly elevated, according to this tweet. And I think we'd agree that there's still,
Well, we have to back up here and make sure we understand the core CPI, the 30% shelter. So after we remove food, remove energy, the remaining stuff in there, entertainment and shelter and wages
yep.
and everything else, all those things, 1/3 of it is the rent. So
and home prices. So
right, it does make a substantial amount of what's remaining.
But the OER is owner's equivalent rent, and that's calculated 2 times per year. So some of the research that we've read in articles and updates from portfolio managers, it's going to be slow for those shelter costs to come down, which again is, and some of the researchers estimate 5 quarters plus a year and a half for it to reflect in the core CPI.
How does it come down? How does shelter?
Well, we know that home prices are, although
down?
they're still elevated potentially, up for debate, but still elevated. They have come down. They have come down in the States and in Canada. I think home prices, it's fair to say, have come down.
I think the home prices have come down, but I think the supply and demand issue is still there. So people cannot expect their $2,000 rent to go to $1,500. It's not going to happen. So
no, but and usually shelter costs are more linked to home prices rather than the rent. I think, but I think my concern here is that, again, if JPOW is waiting for the core CPI to come down substantially, it's going to take a while for this to be reflected. Shelter, wages make up a big portion of that core CPI. It's going to take a while for that to reflect in those numbers, which concerns me if he continues to raise rates aggressively.
Which means, so when do the rates come down, right? So basically, you would think by what he's doing would eventually create something that starts pointing everything downwards. But like you said, if wages don't go down, and the price of home, like we argue the price of homes, we had this conversation before. Home prices have come down. That's fine. That's a statement that can be said. Jerry would reply back and say, the prices they came down from were ridiculous. So even though they're down, the remaining number today is still, according to Jerry, ridiculous.
It's still highly elevated.
Not ridiculous,
sure.
higher than it should be. So therefore, yes, if you're going to go back to the $1.1 million house that's worth $800, you're right. They have come down. But I'm saying that place, the real value is $700. So we're still higher than what it should be.
But that doesn't matter if we're just talking about core CPI coming down. So the housing prices are a different thing. And so the core CPI coming down, which seems to be one of Powell's indicators, he wants the inflation to come down, unemployment, which we're not going to talk about, we don't have time, but the core CPI to come down. So I think that again, positive vibes only, I think that if you trust in Jerome Powell, then, wait a second, and if you trust in Jerome Powell, then you know that he's thinking about this, very smart person. He's thought about this, and he, of course, knows that shelter costs and wages are sticky, and they're going to maintain core CPI a little bit higher. And so if you do trust in J. Powell, positive vibes only, Jerry, then you know that he's taken this into account.
Back at your Philly special, this is the bases loaded, trailing by 3, and Bryce Harper's up for the Phillies, and you just feel really good. But you know what? He too can strike out once in a while.
He can make mistakes,
behind.
But they are, yes.
They are behind. They raise the rates. They got to get things under control. I think they are, but I think there's not enough yet. And
if I was to, can I blow this chart up a little bit? So back to what he's going to do. So here's the expected future path of the 3-month average. Just to show quickly here, potentially next year rate cuts is on the path there. Now, if you had looked at this chart, disclaimer, if you had looked at this chart of the projected funds rate, Fed funds rate, at the start of this year, it would not have been up as aggressively as they've raised them. So we don't put a lot of stock in that, but interesting to see potential rate cut outlook
they've already
for next year.
surpassed what they expected it to be.
Yes, yeah.
And they're not done yet.
Yeah.
Okay.
So a bit of an interesting topic, and one that probably concerns both of us a little bit, if not more.
It concerns me, all right. Go ahead.
I do want time at the end, so no
ahead.
soapbox rants here.
No, that's fine.
But unless you give the people what they want.
It is the
Love a good
worst
Jerry
thing
rant.
that's ever been invented.
So betting apps,
In
is
Ontario.
what we're talking about
Go
is
ahead.
on your phone an application that allows you to put money from your bank account, credit card, line of credit, whatever, add money into this app, and you can bet on any sports event,
Any item
Any-
during a sporting event.
any item. You can bet on horse races around the world at any time. You can actually live gamble at a casino with a blackjack dealer, a live person streaming to you and putting your cards out for you, and then you see them under a camera on the table there. So it's roulette, the whole deal. So it's really gained a lot of traction in Ontario since it became. And the one thing that
the money part alone, obviously, right? You've got some data here on everything's in B's now, billions.
And I think only growing too. And the one thing that I think is one of the scarier parts of it is that you have all these different ones, FanDuel, DraftKings, and you see them if you watch a hockey game, it's everywhere. Wayne Gretzky, Connor
Every
McDavid,
commercial,
all these
every
guys.
commercial
Big
is that.
celebrities are in this all the time. And so it's getting a lot of attention that way. And I think one of the scarier parts is you don't just use one app. Once you use one app, because they give you a free $100, and you go, well, why not take the free $100? And then if you lose that, you go to another app. Well, I'll take the free $100. And you can keep rolling around to all these different apps and get hooked onto the rush of maybe getting a win or that gambling rush. So I think that's the scary part, that it's just so easy to get these apps, and they have these offers that drag you in, and they're not offering you $10. They're offering you $100. In the States, in New York, when they rolled out with legalized gambling, they were matching up to $1,500 if you put $1,500 in. Like that's pretty intense.
Well, shouldn't that tell you what your expected return is going to be? Like, am I missing something here?
Well, of course not.
I've always said this to you before. To me, gambling is one of the worst things that an economy, province of Ontario can. Like,
Yes,
I know
yeah.
the numbers. You're going to give us the numbers here in a second. 2
Yeah.
billion or 2.5 billion. I understand that, but where does it come from? It's coming from somebody's bank account, like you said. It's
Well,
entering.
and like you said, I think you can speak to this, is that silent killer of it. You know, if you have a
Absolutely.
drinking addiction or drug addiction, depression, stuff like that,
You
it's more
visibly
visible.
Visibly see it.
You can hide the gambling stuff for longer, potentially.
And it becomes a really depressing thing to that person. And they get into a position where, I don't want to get into bank accounts, homes, families getting destroyed. It's just not good. And everybody will say, oh, I can control it. I absolutely control it. But the attraction of money, back to the hustler, money won is twice as sweet as money earned. That statement is forever for everybody. You go to work and you make $500 and you work your rear end off, and then somebody, holy macros, I just put $500 on the Leafs yesterday, and it was $1.80, and I just went $400. Huh, what am I working for? The odds are against you.
Yes,
You will lose.
These guys
more
are,
often you will win.
these
guaranteed.
casinos get
and
bigger
who's ever
for a
watching
reason.
this can quote me. Guaranteed, you will lose. There's a guy right now.
Know your
who's
limit.
the guy with 75 million? Who's got? It's been on the news. He's a big gambler guy that he's got $75 million if the Phillies win the World Series. Some
I didn't see
ludicrous
that.
amount to bet.
Yeah, I didn't see that one.
He bet them at
at the start of the year.
7.5 times.
Okay.
And now everybody's front page news, etc. Well, maybe that guy, if he loses $10 million, nothing happens to him. But a regular person losing $1,500 could affect his family.
Know your limit. Stay within it.
Who does?
The other interesting part that I wanted to share here
Okay,
was
go ahead.
was this one, because I thought this was even more out there.
Disastrous.
And disastrous. And so this is a regulated industry down in the States. So if you're in Canada, you can't bet on this kind of stuff. And it might be a little bit small on the screen there, but you can bet on anything from will a hurricane land in Miami to how much will the Fed increase interest rates? What will the latest inflation number be? You can bet on any of these things, and you buy these contracts.
I just picked
how
up
many
my-
flight delays are going to be?
Yeah.
You can bet on this. How many flight delays are going to be? Is there going to be a new COVID wave?
Is this
you can
not a
bet on all
sickness?
this stuff.
Is it not a sickness?
Yes, it is.
Okay,
Yeah.
good.
No, it is. Yeah.
I don't want to elaborate because
This stuff was crazy. And as somebody in finance, it's crazy to be
there's nothing good about
looking at
that.
this.
We laugh at it, but it's devastation when you start getting into this betting on anything. So
student debt forgiveness. It's
I
that's a
think
new
the
one.
gas is going to be $1.61 tomorrow.
Well, and stuff
And
that
I-
usually starts in the
I'll
U.S.
bet $3,000 that it hits 161 tomorrow.
Yeah, you can bet on the average gas price
Yeah.
in the U.S. if it's going to be over or under 450. It's
Wow.
It's out
Okay.
there. So so that was the main.
I'm not saying you're for it. I'm not saying you're for it.
No.
'Cause I know you're not. I'm
No,
saying
yeah.
this is a topic that really hits home for me. I do not like it.
I think adding
So,
the casino element
all.
to it as well is a dangerous aspect.
But
so
you know
to put
what?
a wrap on
Casino. If you actually go to the casino and you take your $1,000, you go get entertained and lose it all. That's okay.
Yeah.
It's when you go to the ATM machine and keep drawing money out.
No,
right?
but that's the other part of it is that this is just money. It's just play money on your phone. Like
yeah.
once it's in there, you don't actually see it. It's not like you have, as your dad would have said, 5 brownies on the table, and then this guy sweeps them sweeps them through that
There's a
hole
little
in the
slot.
table, sucked into
Gone.
the basement. You know.
Gone.
So it's I do think it's scary in that fashion. But I'm gonna reset the timer here because I'm sure if we make it 5 minutes just talking about the Leafs here, will
The
be a
Leafs,
blessing.
You don't need 5 minutes, but keep going. Go ahead.
Well, I think
you're trying to roll me up. Go
as
ahead.
as two Leaf fans, I remember
Okay.
the theme of the podcast, the title of the episode, "Positive Vibes Only." So, I mean, I think if we
I don't have a lot of negative vibes, but that's
no,
fine.
I mean, we're both big Leaf fans. I think a lot of our clients and friends know we're big Leaf fans. So, I mean, we'd like to chat about what's going on, the season outlook. We didn't get a chance to do it quite before the season started, but how we're looking so far this year and what you think.
I think the really deep-rooted Leaf fans know that Austin Matthews has 2 years left on his contract, and Marner
Positive
has 2
vibes
years
only.
left. This is positive.
Positive vibes
So
only.
what happens during the regular, short of a complete disaster where they drop out of the playoffs, I don't think anybody really cares. They want to present a good product and you want to, see good hockey, but they have enough skilled players that they should end up with their 95 points or 100 points and get in the playoffs. And then we all know, because the media will tell us, oh, the Leafs have lost 7 series in a row in the first round and it'll come up again. So I think the focus for Toronto is literally get to the playoffs. If Austin Matthews scores 20 goals this year instead of 60, it wouldn't bother me one bit. What would bother me is, Jesus, he doesn't look like he can even shoot the puck anymore. No, I don't see that at all. So therefore,
He's going to eventually even out. I used to say, call me when the Leafs get in the playoffs. That's all that matters because they have a good enough team. They're going to make the playoffs. But now I'm starting to think they have to start doing the things that good teams do in the regular season to set themselves up for success in the playoffs.
Like what?
And I think the 3 things that I would identify as the first one is, speaking of betting, the first one is you can't allow the team, you can't go down 1-0 in the first 5 minutes of the game. And the amount of times the Leafs do that is staggering, where they spot the other team a goal in the first 5 minutes. Second thing, as my old coach would always say, no goals in first minute of the period or no goals in the last minute of the period. And the amount of goals they let in the last minute of the period is also staggering. They start running around, boom, 20 seconds left in the first period, they got another goal against them.
look what happened yesterday with Las Vegas, right? They had a pretty good second period. they carried the play. They didn't do very good in
But
the
they
first.
spotted him a goal in the first 5 minutes.
But the third period they come out, and it looks like all the players were Jerry Kallitsis playing, and they took 8 shots on Samsonov in the first minute.
But do you agree?
And got the goal.
You know, like you have to, it's fine, you know, and you have to be able to capitalize. You can't lose to Arizona. You can't lose on the Monday night to Arizona.
They've lost to Arizona since 2002.
It's going to happen, you know, it's going to happen. And then they'll play Boston and they'll beat Boston 4-2 or something. And you'll be like, oh, they're the best team in the league. But you can't, I'm telling you, you can't let those goals in the first 5 minutes and spot the other team a goal. And I'm sick and tired of seeing them get scored on in the last minute of a period. And my final one is Morgan Rielly, love him. He's been with the Leafs, thick and thin, good defenseman. You start watching, and now that I've said this guy can't hit the net. He does not hit the net. When you start watching, and I said it, you know when people mention like, oh, I'm thinking about getting a Jeep or something, and then you start seeing Jeeps everywhere? Once I've said this to you, that Morgan Rielly doesn't hit the net, you're going to start noticing it, and he just does not hit the net. But I'm getting off the positive vibes only. So I think the Leafs have a good team. Samsonov has looked good.
Yeah, he does.
Samsonov has looked good.
He does, yeah.
And a good signing by Dubas.
First round draft pick for 3 years or whatever it was, right?
Good pickup by Dubas to get a little backup for Murray.
Absolutely. So I don't want to talk about Justin Hall. I don't want to talk about this because it just gets me riled up. But it doesn't matter. What I will say is hidden in all the stuff that's going on is Muzzin, long-term injury, whatever it's going to be. Murray, groin pull, whatever. This is $10 million of freed up room to get some of these guys up here, and the Leafs can't get pushed around. And Dubas figured it out, and that's why Simmons. I'm not sure about Clifford, but that's why Simmons and these guys.
I don't agree with that.
Matthews has been hit more times in the first 6 games.
But he got
cheap
hit.
shots. Hold on, it's not just hits, like roughed up. And Matthews can take care of himself, but I don't want him taking care of himself.
But Simmons isn't on the ice with them, so he
No,
can't
I
do
understand.
anything. He's going to go bump into the fourth line guy, and then
you have to go back to the old-fashioned hockey. Somebody's got to defend your players. That's all. And I don't want Matthews even though he can, I don't want him defending himself like that.
I think a few of the injuries too, to put a positive spin on it, bring it back to that, would be Samsonov's look good, and getting the younger guys up has been great. I mean, Robertson, for whatever reason, hasn't played the last couple of years. This guy can score goals, and
he's an offensive player.
He's proven that, and he's made a couple of good defensive plays too. So don't sell him short on that. But he is an offensive player. He can score goals, and I think he's going to be
in the
good.
starting lineup of an NHL team, CJ.
And that's what Tavares and Nylander need on that second line, is somebody that can score some goals. So I'm happy to see Nick Robertson up there.
Anybody that's shellacking Mike Tavares can look at this and say, this guy scores a point a game his entire career. Nothing that I see is changing that. Number one.
He had 2 kids. He's a dad. He's tired, Jerry.
And Nylander.
He's had 2 kids in the last few years.
You've had 2 kids. I've seen no change in you either.
He's tired.
But Nylander has 10 or 15 pounds added to him, and he clearly is playing with edge. Like he wants the puck.
Okay, we're out of time. Early season prediction, Leafs. Where do they end up here?
I think they end up second or third in their division, depending on. I think Boston's a little.
Do you think road? Do you think we got a road playoff game first series? We're on the road.
Well, if you finish the first 2, you get home. Is that what it is?
Yeah.
I would still lean on finishing the first 2.
Yeah.
Personally, but right now the way they're going, they're lining up for second or third.
On the road.
Okay.
In Boston. Exercise the demons. Gotta slay the dragon. They'll be on the road in Boston. That's my early season prediction. Positive vibes only. Leafs win Game 7. Tampa second round.
I'm not giving a prediction. I'm gonna go to some games first, and then I'll let you know in the next time when I see what's going on.
Live.
Let's leave it at that.
Okay. Well, happy Halloween, and we will see you next month. Thanks for tuning in.
Sounds good.
All right.
Thanks.
CJ Stevens and Jerry Kallitsis work for Investia Financial Services Inc. All opinions expressed by CJ and Jerry are solely their own and do not reflect the opinions of Investia Financial Services Inc. This podcast is for informational purposes only and should not be relied upon for investment decisions. clients of Investia Financial Services Inc. may maintain positions in the investments discussed on this podcast. Mutual funds and/or exchange-traded funds are offered through Investia Financial Services Inc. Insurance products and services are offered through PPI Management Inc. and through multiple insurance companies. PPI Management Inc. is an independent and separate company from Investia Financial Services Inc.